Hi everyone, welcome to the channel. Today our focus is going to be on the company Advanced Auto Parts, ticker AAP. I did a video on this company back in October 2023 about the time I bought into the company as I felt this stock was undervalued, and since then it's up about 70%. In this video, we'll take a quick look at their financials, perform an updated stock valuation, and at the end of the video, we'll look at my portfolio performance. And if there's a stock you would like me to look at, just mention it in the comments below. And don't forget to subscribe to the channel if you get some useful information. So let's jump right into it. Looking at their financials, there is quite a bit of red, especially for the recent years, but I will mention the company has a new CEO, which started about 6 months ago, or maybe just under 6 months. So he's still implementing changes that will take another 12 years or so to fully implement. But starting off with revenue, it's been growing over the last 6 years. However, it's only up about 15% since 2014, which would be about a 1.5% CAGR over the 10 years. Next, net income and earnings per share are two data points with consecutive down years, especially for 2023. This was addressed during their recent full year earnings call, and I suggest you listening to that if you're considering buying into Advanced Auto Parts. But even after those results were released, the stock did not take a big hit, and it's actually up quite a bit since then. So the market is believing in the changes the CEO is trying to implement. Then for dividends, I like seeing companies that pay a dividend, increasing them over time. And for Advanced Auto Parts, they were doing this up until 2023, but then cut it. And as I mentioned, the company is making changes, so don't expect any significant increases in the near future. One nice bright spot here is the share count. It's down about 20% over the decade, so hopefully they can continue that moving forward. And then free cash flow 2023 being pretty disappointing, the lowest it's been over the past 10 years. But I do expect the changes the company is implementing over the next year or so will help to improve on this. So let's jump down now and we'll perform the stock valuation. Here's the valuation setup for Advanced Auto Parts, and I will point out back in October of 2023, I did value the company at $82.85, and I was using a 65% margin of safety, which brought it down to just under $69. And I was also using a higher discount rate at 12%. And at that time, the stock, when I posted that video and I provide a link, was trading in the mid $50 range, maybe $54, $55, slightly higher from when I made my original purchases, which I'll show you in a few minutes. But now, based on their latest financials from their full year 2023 results, intrinsic value I have now at $101, and with a 75% margin of safety, bringing it down to $75.76. And that's based on a 1.5% short-term growth rate over the next 10 years with a 10% discount rate, and I am using a 3% long-term growth rate. Now, up here on the top right, net income CAGR, as we looked at their financials, is actually down over the last 10 years. And actually, 2023 was a little disappointing. And I did mention this was addressed during their earnings call the other month. And I do expect these results to start improving as the new CEO implements his changes. But we can see over the last 10 years, it's actually a negative CAGR at almost 27%. The same thing with earnings per share, negative 25% CAGR. Again, very disappointing 2023 results, but I fully expect that to start improving with the new CEO in place. And this is why I am also using a pretty low growth rate. 1.5% is pretty low. I think at minimum, they should probably keep up with a typical inflation at 3%. So I think my intrinsic value here at $101 and with that 75% margin of safety, which also is somewhat conservative, bringing it down to 70 or just below $76. It's a pretty conservative valuation. Now, let's just see what happens if I do increase that growth rate. Let's just say 3%, how much that ticks up. Now, with a 3% short-term growth rate, intrinsic value jumps up to $113.42. And with that same 75% margin of safety, brings it down to just over $85. And this is really where the stock's trading at right now, in that mid $80 range. So I think it's a pretty fair value, even using that 1.5%, though you might not be getting the full margin of safety in there, but still paying $85. I think it's a fair value to buy into Advanced Auto Parts. Yes, there is some risks, believing that they're going to implement these changes to help improve those financials we saw a few minutes ago. Well, let's look at a few other data points here. Starting off PE ratio, 172, so very, very high, especially for an auto parts company. But again, this is based based on those 2023 results, which were disappointing, and I emphasized this several times now. So we should see this coming down to something more reasonable moving forward, or at least next year when they release their 2024 results. Again, long-term debt to free cash flow very high, but that's because their free cash flow was the lowest over the past 10 years for those 2023 results. So again, I expect this to come down. And typically I like seeing companies under 3. So hopefully these results start improving and we see both those metrics down. Now, dividends, we did point out that dividends were cut back in 2023, but still it's up over 700% since 2014. So they're still paying a dividend, good sign here, and that growth is still very good. So hopefully they can start ticking up that dividend, but don't expect any significant increases until they start straightening out some of their other financials. And that does give based on the current dividend, gives a dividend yield of 1.2%. So under the S&P 500, what that gives, I believe that's more like just over 2%, maybe 2.2% dividend yield for an S&P 500 ETF. Our share count, as we discussed a few minutes ago, it's been down, so down almost 19%. So good sign there. Hopefully they can keep this up moving forward. And then net profit margin. Now, typically I like seeing companies over 10%. You can see here, Advanced Auto Parts well below that. Over the past 10 years, just over 4%. Last 3 years, just over 3%. So again, I expect these margins to tick up. Maybe not quite hitting that 10%, but getting into the high single-digit range. Now, one other data point I like to point out is return on invested capital. Again, I like seeing this typically over 10%. We can see this has actually been falling over the years. Back 10 years ago, just under that 10%. 5 years ago, just below 7%. 3 years, 5.6. Then the 1 year, just over or just below 1%. So again, hopefully they can get this up. Maybe not quite to 10%, at least in the short term, but maybe in the next 5 years or so, they can start getting this up to closer to that high single-digit range and into that 10%. Well, let's move on and I'll show you my purchases into Advanced Auto Parts. Here are my purchases into Advanced Auto Parts and the initial buy-ins back in October 2023 at just below $51. So these are up just under 70%. And if I put my money in the S&P 500 back then, I would be up just over 21%. So far, Advanced Auto Parts paid off. And I will admit, I'm surprised it jumped as much as it did, though I felt it was undervalued. I didn't think it was going to jump up 70% in 5 months. And then I just bought in again in March of 2024 at just below $86. And below you can see the overall investment into Advanced Auto Parts. So I have just over $5,000 invested in the company, and based on that, or based on the current valuation with the gains, it's about just over 7,700. So let's move on and look at the portfolio's overall performance next. Here's the portfolio's overall performance and Advanced Auto Parts on the lower right there. So this is a smaller position compared to many of the other ones. And one of the reasons is, as I mentioned during the video, there is some risk because it's still somewhat of a turnaround company, though I do think it's undervalued. They do need to improve their metrics and their financials. But a few other ones I'll point out. PayPal, I've owned that probably for about 6, 7, 8 months now, and it's finally turning around. You can see it's up just over 8%. And same thing with Google. I own Google now for probably just over a month, and it's finally turning around as well, up almost 10% or 9%, depending on which account it's in. A few other ones I'll point out. Toll Brothers, TOL. This is a home builder. I did a couple videos on this, one a few weeks ago. So I'm very bullish on home builders like Toll Brothers and Pulte Group, PHM. It's another one I've held. Both these home builders I've owned for about 2 years now. We can see up over 100%. One account for Toll Brothers up 170%. One other one I'll point out is NVIDIA. I bought into them about 3 weeks ago when I released a video on their valuation. And though I had to pay more than what my valuation was, I had about $800. It was trading around $840, $850 at the time, and I knew I was going to have to pay a premium because I didn't expect it to get below $800. But I bought in anyway. See, it's up almost 11%. I would like to buy a little bit more, but it's trading over $900 now. So maybe if it falls below 900, I'll look at buying a few more shares. But so far, I'm happy where I currently am with that position. But if you have any other stocks you'd like me to review, just let me know in the comments below. I hope you enjoyed this video, got some useful information. If so, consider subscribing, and I hope to see you next time. Thanks for watching.